All right. Matt, the mortgage guy. In today's video, I'm going to talk about, will rising interest rates affect demand for real estate? In today's video, I'm going to talk about where it'll affect demand, how it will affect demand, how much, when, how soon, all that stuff you're dying to hear from somebody who is generally pretty bullish on real estate. I think you'll be surprised in today's video. Some bearish comments might come out of my mouth, so stay tuned. All right, Matt, the mortgage guy, residential mortgage broker, sharing with you the conversations that I'm having day in and day out with consumers, with real estate agents, with other mortgage professionals, things that you will not see or hear from mainstream media or published in a newspaper until months from now. Because the conversations that are having now, the pre-approvals that are happening now, all the consumer confidence behind the scenes conversations are not going to make it to a statistic sheet or to an article for months to come, right? So in today's video, I want to talk to you about how interest rates are going to affect demand. Because if I stood up here and told you like people are continuing to buy, supply versus demand is so imbalanced that no matter what happens, like full steam ahead, I would be lying to you, right? I'm also not on the housing crash 40% next quarter side either, right? I'm somewhere in the middle where I think sanity lies. Couple things that I've been hearing, seeing, feeling, talking about that I want to share here with you about demand. We have already started to see the consumer react to higher interest rates. In my practice, in other mortgage folks' practices, real estate agents I talk to, there's going to be a segment of buyers that no longer qualify or are no longer willing to purchase a house. Home prices have increased, rates have increased, and therefore that housing payment is either no longer affordable or no longer something that they want to do, right? It's a willing and able thing. Some people are not able to, meaning they don't qualify. Some people look at it and go, you know what? I'm not willing. I'm not willing to pay $3,800 a month. I'm going to hold off, right? And so if we take the red hot demand that we have today and we pull it down by 30, 40%, what does that do to the housing market, right? What most of us predict and what most of us honestly are rooting for is a more balanced housing market, a housing market where prices go up anywhere from 3 to 5%, right? A little more palpable than the 18% increases we've seen in markets across the US. Here's an important topic I want to bring up as well. As we see demand start to come down, exactly what the Fed is trying to do, raise interest rates to quell demand, you're going to see it affect different markets in different ways. Some markets are going to be affected more than others. Some markets might see a 10% decline, a 15% decline in housing prices. Others might continue to go up. I'm going to use my market, Sacramento, California, as an example. What we've got in Sacramento is 17 days of housing inventory, 21 straight months of less than 1 month of housing inventory, a humongous shortage in how much we're building compared to how many new households are being formed. So I don't think that Sacramento, California sees any price home depreciation in the next 5 years at all. We've got another thing to consider. I was just looking at a chart. Realtor.com does it. I'll put a link to it down in the comments because it's really interesting. It's called cross market demand. So you can type in Sacramento, California. They've got a cool Tableau chart, and you'll be able to look this up yourself and look it up for any market. The top counties where demand in Sacramento, California is coming from. You may ask, where does information come from? People search on sites like Zillow, Redfin, Realtor.com. You know what Realtor.com does? They collect that data. Someone who's typing in 95825, 95826, 95819, looking in Sacramento, California, where are those people located when they're looking? 11% of them are in Alameda, Bay Area. Big money folks, right? They're interested in coming to Sacramento. Santa Clara County, 10.9%. big money, big earners looking to come sell their $2 million house and buy one of these really inexpensive homes in Sacramento for only $800,000, right? Placer County, a neighboring county that's, similar in price point, maybe slightly higher to Sacramento. Then you got San Francisco County, San Joaquin, Contra Costa. There's quite the what is the word I'm looking for? When you see it over and over, there's quite the theme. No, quite the. Tell me in the comments what the word is that I can't think of. A lot of these top 5 ones that are looking in Sacramento are all Bay Area counties. Then you've got like Los Angeles and Yolo, El Dorado, and San Mateo County. But, look in your area. If it's somewhere that has 2 things going on, more households being formed than homes being built, then the supply versus demand issue might be more persistent than you think. If it has, tons of houses being built, some markets are like 1-to-1 with how much is being built versus how many households are being formed, and then you squeeze down demand, those markets might go flat. Those markets might see a 10% decline, right? So it will be interesting to see what happens this year in my market, in other markets, based on demand coming down. One last thing to consider is that my buddy Mike Zuber talks about supply destruction. It's all a balance of supply and demand, right? And we know we're pulling down demand. We know we're going to have less demand because of affordability. Home prices going up, interest rates going up, less people qualify, less people want to buy. But on the other side, we need the supply to come up as well to create a balance where we're in a more balanced market where Sacramento someday is going to have more than a month of inventory. If the people that were going to list their homes and we're going to move are sitting in a 2.75, 2.875 mortgage, less likely to move, less incentive to move, right? I've done countless move up scenarios, move down scenarios. It may not make sense. For some people, it does, right? Some people grab a bunch of equity, take it, go into their next home, pay off some debt, have a similar mortgage payment because of how much they're able to put down, right? Some people it's going to work for. For a lot of people, it might not. So they're going to stay put. Whatever the case, we're going to see some disruption in housing over the next 3 months, 6 months, a year. Does it mean that housing is not a good investment? Absolutely not. If I was buying somewhere like Sacramento, I would think to myself, 5% or 4.75, and the 550 price I'm paying today is going to beat the 575 and the 550,000 price that might be Q3 or Q4 of 2022. And like long-term stock investing, it's time in the market, not timing the market, right? So you buy and hold for long-term. If you're buying and you're going to sell next year, I'd be the first one to tell you, maybe you don't want to do that, right? You don't know what's going to happen. Things might go flat. You might lose 5 or 10%, depending on what market you're in. But time will tell. Know that real estate, while you can look at it from a national perspective, it's always going to be local. Sacramento might go up 12% in 2022. Another market might lose 5%. Some markets might gain 20%, while others lose 17%. We will see. One thing I know for certain, demand is coming down. I hear it and see it every day. People that are bowing out, right? It's unfortunately the sad truth. If you're looking to get pre-approved, if you want to work with my team and see what your scenario looks like just to get yourself educated and ready to buy, we are more than happy to help. Go to greatmortgagebroker.com, fill out the form, let us know where you're at and how we can help. We're more than happy to help. Hopefully this thing was useful. Let me know your comments below, what you predict in the future. Whatever the case, there's no denying real estate is a good long-term investment. It's not my opinion. It's that of every single person who's got any amount of net worth, right? They've got some piece of that tied up in real estate. So I'm sticking with real estate.